Hello and welcome. You're watching Last Take. I'm Shweta Kothari. With me in the studio is my colleague Suyash Maheshwari. Suyash, hi, good afternoon.
Hi, good afternoon.
Let's quickly run our viewers through the market action this afternoon. Both sensex and Nifty up 0.5%.
Yes, Shweta, very good day for the markets. You know, in the last couple of sessions, we had been struggling around that 19,750 mark. Now, in today's trade, we saw a gap up opening, opening above that 19,750 mark on Nifty. And not only did we open above that, we managed to stay above it, never dipping below that level, for even for a minute. And that was a level that provided crucial support in today's trade. So we have reclaimed that 19,750 mark on a closing basis. On the upside, however, we were seen facing some sort of a resistance around the 19,830 mark, which is just about 45 points shy of the 19,875 peak we hit on Friday's trade. Overall, the markets was able to snap out of its 2-day losing streak, with Nifty ending 0.45% higher at 19,783 marks, so about 17 points shy of that 19,800 sort of levels. Sensex, which in intraday trade did claim that 66,000 mark once again, could not sustain above those levels and ended below just about 70 points shy of that. Midcap and the small cap index, Shweta, the kind of momentum that we have seen, that is somewhat slowing down in the last couple of sessions. We have seen broader markets giving mixed sort of a performance, whereas Midcap 100 is on a Nifty Midcap 100 is on a 14-day winning streak. It opened at above the 42,000 levels for the very first time, did not close above it. We gave up over 100 points or so on the Midcap index and closed below the 41,900 mark. Small cap, which was the best performing index in the opening trade, I think it was up about 0.8%. We saw some heavy profit booking taking place just like yesterday, and in fact it ended the day lower by about 0.11% below the 13,900 mark. On the upside, we have seen some sort of a resistance build up near the 14,000 mark, which by the way the index has never reclaimed, so that is uncharted territory for us. Volatility also picked up a little through the day. The India VIX was down in the opening trade. However, we saw a sharp spike in volatility in the mid morning to late afternoon trade, and India VIX settled around 0.69% higher above the 12 sort of levels. And even if we look at the entire market statistics and the momentum in today's trade, the entire trade setup is once again favoring the bulls. In today's trade, if we could pull up the statistics chart, you'd see advances. The number of shares that were in the green, ended in the green, were about 1,389, whereas only around 1,080 shares declined today on the NSE. Around 125 did not move at all in today's trade. Apart from that, 129 stocks hit an upper circuit, whereas 53 stocks hit lower circuit in today's session. Among stocks that hit a 52-week high, we had around 193 stocks that hit a fresh 52-week high in Tuesday's session, whereas about only 9 stocks hit a fresh 52-week low.
All right, that is as far as market action is concerned. Amit Gupta, founder Fintrack Capital, joining us on the show. Amit, good to have you back. Good afternoon, sir. Let's quickly run our viewers through what are you making of the markets today. After closing 2 days subsequently on a low, markets have sustained momentum today. What are you making of the market action? It's Tuesday now. How do you see markets moving? In which direction for the remainder of the week?
Hi Shweta, hi Suyesh, good afternoon. Thank you for having me. So I believe the earnings season, did give us some positive surprises. Overall, Nifty has seen some upgrades. The earnings growth was in north of 20% in many of the sectors, except probably IG. Market has digested all those earnings, last week was a little slow because of the festive season, but few of the earning con calls have also finished in this season, and sort of market has digested all that news and earnings, and post the management commentary. And we are at sort of on the mid cap and the small cap space, we are actually at the all-time highs. We have made new highs after the correction in October. Nifty is still struggling. My sense is that because of the banking sector or bank Nifty, the Nifty is finding a little difficult to move above the resistance of at 19,900, 20,000 kind of levels. But otherwise, the markets look quite stable at this point of time, and they will continue to track the stock specific actions and the news flow which will come their way.
All right. Specifically on the broader markets, they seem to be losing some of their gaining momentum. They seem to be losing some of that heat that has sustained now for a while, especially small caps ending in the red today. What are you making of the broader markets? Is the exuberance tapering off finally?
No, I don't think the exuberance is taking off, but when you have quite a good run, Suyesh was also saying almost 14 sessions of green in mid cap. So I think similar numbers will be there for the small cap index also. Some of the mid and small cap stocks have run a bit too far. So some bit of profit taking is coming their way. I still believe that the small and the mid cap is a stock pickers canvas. And just the sheer number of companies and subsectors you can choose from that is keeping the market participants very excited. We have seen the SIP flows coming into these spaces, very good. The numbers were out last week. We are seeing a lot of inflows in this sector. And my point is that, a lot of these subsectors does not have a presence or very high weightage presence in the main index. So the like capital goods, defense, etc., EMS, construction, renewables. So that is keeping the momentum high. But 1 or 2 days in red won't change the trend immediately.
Okay, so you don't see the exuberance tapering off. You see there continued perhaps exuberance in the coming few days as well.
So exuberance is there, but in certain sectors where the valuations are really quite expensive, but like these order-based sectors like railways and defense, these themes, I think the valuations have really run up a lot, and now they have become sort of a momentum-based trade and not really based on fundamentals. But if you look at some of the other sectors like renewables or even power distribution, transmission, these are more of a beneficiary where you can still find a reasonable valuations. Chemical and pharma companies are also sort of making some comeback on the mid cap and the small cap space. So my sense is you have to be a little bit picky about the stocks which you are choosing and the themes which you are investing in. But overall, there are certain sectors which are exhibiting.
Okay, so fundamentals are not really supporting the momentum
in
broader
given
markets.
The kind of run-up that we are seeing, sustained run-up, as Amit also pointed out, we have never really seen a major decline. I think it was only 2 sessions where both mid-cap and the small-cap index gave away a lot of gains, about 3 to 4% they corrected. But apart from that, Shweta, if you look at the price charts, it's just sea of green for both mid-cap and the small cap.
And come to think of it, all our experts so far have said on record to stay away from broader markets, given the volatility can go either ways and you can never predict.
Right. And sir, we have been taking a lot of cues from, the global markets, and the 3 powerful forces, the dollar index, the crude prices, the bond yields, they have come down, significantly and helped markets around the world post hefty gains in the November series. Dollar index is down to nearly a 2.5 month low. Crude prices have slipped by about $14-15 from their peak of around $95-96. Bond yields have corrected by about 0.6%. Now this has definitely helped global markets, but it has also helped the emerging market pack. Now, do you expect that this exuberance because of the global cues will continue, or most of it has been already priced in?
No, I think a lot of these positive things can actually continue for quite some time. My sense is that the correction which we are seeing in bond yields and also in the dollar index, these are sort of sustainable over a short period of time. We also need to understand that the markets in US in particular were very oversold till last month end. And post the FOMC meeting, where there has been more clarity that there is going to be no further rate hikes, the inflation is also coming down. The crude prices have also, corrected quite a bit. So now the sense is that they may not cut the rates, but at least the rate hikes are off the table. In fact, with the latest data which came out, inflation data which came out last week, the probability of a rate cut has actually increased in next year, sometime
Okay.
June. So my sense is that all these will keep the sentiment positive, and until and unless you get a data which indicates that inflation is again rising or may rise because of certain reasons, could be geopolitical also. Until and unless, I think the market would remain stable and try to sort of follow the earnings trajectory.
All right, and given that inflation has cooled off and we are also expecting FOMC minutes of the meeting to be released later today as per US timing, what is your big expectation? Is the narrative higher for longer no more sustainable right now?
No, I think the higher for longer narrative is still in place. There is no contradictory evidence apart from the fact that inflation has cooled off a little bit on a month-to-month basis. The core inflation still would take some time to get to the Fed's target of 2%. It's currently, I think, around 3.4, 3.5%. The core inflation, ex energy, ex food, would take some time to cool off. And I think that would keep the sort of rates a little higher for longer. If you read the Fed commentary, and I'm sure today's Fed minutes will also confirm that, the idea is to till something is not going to break down, we'll stay with this narrative of higher for longer and keep the interest rates higher, so that there is no possibility of inflation rising its head again, and we can have a safe soft landing of the economy. So I think as of now there is no contradiction on that, and we will stay pat on the rates for quite some time.
Now, sir, I mean, are we heading towards a soft landing? Because we are also, hearing chatter of US perhaps falling into recession by the second quarter of 2024, given their fiscal situation, which has deteriorated quite significantly in the last couple of years. What's your take on that, sir?
Well, what are the chances of a soft landing? I mean, with a double whammy, inflation as well as recession, both of those rearing their heads and not looking very good at this point, what are the chances of one happening over the other?
Right. So I think that the fiscal situation of US is not new. It has been deteriorating for quite some time. But remember, we already have sort of rating downgrades for that. So I would, sense with some sort of confidence that it's priced into the market. We had Moody's and Fitch, changing the rating for US, changing the outlook for US market. So the reason for changing that was the fiscal situation only. I don't think that is something which will be a surprise to the markets. Obviously, next year is US elections, and if the government decides to really throw the money like they did during the COVID period, then there could be concerns. But as of now, I don't see that happening at least that pace. And remember, Fed is still doing QT, quantitative tightening, so the balance sheet is still getting off almost 1.2 billion every month. So all these factors would sort of give some confidence that we can somehow avoid a hard landing, and we might still have recession-like conditions because the unemployment is rising a little bit, the jobs being created is going down a little bit, but still it's not at a panic kind of a situation. And I think a Six Sigma event nobody can really predict, but at this point of time it looks a little difficult that we are going to have it. But still, that's a risk to the market which we have to consider. We cannot completely rule it out, but as of now, it's looking a little easy on the screen.
All right.
I also want to get your views quickly before we move on crude prices. Now, crude prices continue to further inch up, nearing $82 a barrel at the moment. There are talks and chatters about how OPEC countries could further cut production. All of this in realm of speculation at this point in time, but the current production cuts will sustain till 25th of December. If there is a production cut, and if the chatters were to be true, what sort of impact will that have on oil prices? Do you see demand coming in for oil?
No, I think the demand from China, which is the largest energy consumer in the world, that has not really recovered amid the economic slowdown in that country. So I think the concerns over the demand due to weaker global economy and rising crude inventories in the US, that has sort of weighed on the prices, and I don't see very sufficient evidence that this is going to reverse very aggressively over the next few months. So my sense is that oil is expected to continue with the downward trajectory which we have seen in the recent weeks. The oil balance may not be as tight as for the remainder of the years, but the demand is definitely a bearish price driver for the crude. And also, the Saudi may extend its additional voluntary oil output cut of 1 million BPD barrels per day into next year, into 2024 also. That should sort of limit the downside to an extent. So my sense is, the demand is capping the upside, and the voluntary cuts which we are seeing, that is limiting the downside. So we might see crude between $70 to $90 for some time to come. Obviously, this is subjected to no more geopolitical issues, no more wars, etc. But that is my sense. We'll average around $80 per barrel.
All right, we can all do with no more war. But moving on to some of the sectors that we are tracking, Suyash.
Yes, Shweta. So a few sectors that I want to point out in today's trade was the Nifty Bank. Now let's look at Nifty Bank. We had seen a doji sort of a pattern on the price charts yesterday. Doji pattern indicates uncertainty between the market. It looks like a spinning top with a long upper wick and a lower wick. After that, we saw a good bit of a movement in the banking pack on the whole, where we also managed to scale past the 43,700 sort of levels, but did not close above it. On the whole, Nifty Bank was up 0.24% in today's trade. Another sector is the FMCG pack. Now, FMCG pack has been moving in a channel since July, since about July or so. And we have seen some sort of a resistance build around that 52,850 sort of levels, where after whenever we go to those levels, we see a bit of correction. But on the downside, we have formed a strong base at around 50,000 mark on the price charts. Another sector on my radar was the pharma pack. Now, pharma pack has also seen a technical sort of a breakout in the last couple of sessions. We had been struggling around the 15,700 mark for the last 3 or 4 months now. We have not only managed to break above that, but formed a new lifetime high on the pharma pack. And we pretty much at the day's high, we were at somewhere around 15,997. So just 3 points shy of the 16,000 mark. Another sector which benefited from the the global cues was a metal pack. The dollar index, as I mentioned, has slipped to a 2.5 month low. It's at around 103 sort of levels, and as we know, there is an inverse relationship between commodity prices, metal prices, and the dollar pack. So that's why we are seeing a good bit of a movement in the metal pack on the whole. IT stocks, although, have seen some bit of a correction, and that is to be expected, given the kind of run up that we have seen in the last 6-7 sessions, where the index on the whole has rallied about 6% or so. So perhaps some bit of a profit booking taking place there. And sir, what's your overall outlook on the banking pack? That was one of the sectors that was outperforming before Friday's crash on the back of news that RBI is going to tighten the norms for personal finance. But we are seeing a good bit of movement once again pick up in yesterday's trade and in today's trade as well. What's your outlook on the banking pack as a whole, sir?
So I think the overall, there are a few concerns in the banking sector, especially on the personal loan segment of the overall credit. Even though the balance sheets are cleaner as compared to the last cycle, the asset quality is quite good at this point of time. But we are not seeing the credit growth as expected, and the reason for that is the capex is only happening on the government side, and the private capex is mostly on the maintenance side itself. My sense is only once the elections are out of the way, we are going to see private capex sort of picking up in the second half of next calendar year. Obviously the personal loan segment has been growing at a very fast pace in the past 18 months. The credit outstandings have grown almost 10% from 15 to 25 in this last 18 months. And so that was the worrying part, and that's why the RBI governor actually warned in last couple of MPC meetings, and then they finally took the decision of increasing the rates. So certain companies and sectors will be impacted because of that increase in the risk weight for the consumer credit exposure.
Okay.
And my sense is that a lot of we are seeing a reduced exposure to the financial sector, especially the companies which are impacted by that over the next 2 quarters. And even in the market, we are seeing some sort of shifting, some sort of profit booking or cutting of positions in these names, and the people are moving towards other parts of the market.
All right, we definitely want to explore better impact on consumers as well as consumer durables. Perhaps we'll do that in just a couple of minutes from now. But moving on to the IPO Corner, IPOs that we've been tracking. Among the 5 big IPOs that we discussed here on News 9, IREDA opened up for subscription today, Suyash.
Yes, Shweta, had a good response from the market there too, where we have seen the issue being fully subscribed just on the day one alone. On day one, as of 3:30 p.m. the issue on the whole was subscribed by about 1.68 times. The retail portion has seen strong demand, where the retail portion was booked almost twice. It was booked by about 1.76 times as of 3:30 p.m. The QIB portion, which QIBs are largely absent till the final day of bidding, they have also participated early on in the subscription process, and they have fully subscribed to their portion. Their portion as of 3:30 p.m. today on day one was booked by about 1.22 times. The non-institutional investor book has also been fully subscribed, and their book has been filled by about 2.07 times.
All right, that is as far as day one of IREDA's IPO bet is concerned. Looks like there's a strong retail participation coming in, Suyash. But let's also quickly run our viewers through top gainers and losers for the day.
Yes, Shweta. So among the top gainers in today's trade was SBI Life. Now, SBI Life has seen quite a bit of volatility in the last 2-3 sessions. On Friday's trade, it was up about 4% or so to touch an all-time high level. On Monday, we saw a decline of about 3%. Again, it's up by about 3% or so. So, a bit of choppiness in SBI Life. HDFC Life was another insurance stock that ended among the top gainers today. Adani Enterprises, another stock that has seen wild bouts of volatility, hit recently. Yesterday it was among the top losers. Today it's among the top gainers, ending 2.2% higher.
Let's also quickly get in a word from Amit. Amit perhaps could explain us what's leading to this volatility in Adani Group stock. Adani Enterprises, the flagship company, lots of volatility, lots of news items coming in. We don't want to speculate, but what according to you is technically moving the stock?
I think there is a little bit of excitement because of the IREDA IPO in the overall renewable energy sector. A lot of the stocks within these sectors, whether it is solar or wind energy, these have been going up over the past week or so. Remember there has been an announcement of 500 gigawatt non-fossil fuel capacity installation by 2030 by the government. We are aiming for net zero emissions by 2070, and a lot of these stocks, including Adani Enterprise, actually benefit from that. But I think in the short term, just because of the IREDA IPO, and the fact that it is one of the largest, it is the largest pure play green financing NBFC in India, which is going to fund a lot of these companies in the renewable energy sector over the next decade. My sense is that's why the excitement is there.
All right. Among other gainers, Shweta, was JSW Steel and Hindalco. Again, Metal Pack did fairly well today, and we are seeing two of those stocks feature in the list of gainers. On the other side, BPCL saw some correction today, and it was on the back of a pickup in crude prices again. BPCL on the whole has benefited quite significantly in the last 1 month or so. It's up around 14-15% or so because of that $15-20 decline that we have seen in crude prices. Among other losers was Tech Mahindra and LTI Mindtree. Now IT Pack on the whole, as I also mentioned, has seen some bit of a profit booking take place in today's trade. So LTI and Tech Mahindra was from that list. Among other losers were NTPC, which declined by about 0.5%, and L&T, which has declined by about 0.45%.
All right, that is of course top gainers and losers for the day. But I think with that we've come to the end of Last Stick. We'll be back after a very short break.